just a second and I'm going to start. Well, welcome everyone. My name is Mike Hamilton from Trade the Easy Way, and I am just going to take a quick look at the markets. I'm going to keep it nice and simple. I'm going to keep it as a general chat as well. I'm just going to share some observations with you. So you're looking at the weekly chart of the pound US dollar. This has been crucial for this year because it's just one way of looking at the strength of the dollar. I think my view is if this gives way at any stage, then I think that could have a knock-on effect in the rest of the market. So we saw this plunge, pound US dollar plunge to close to parity, and here we are at 122, 123 area. So if this lift fails and we find ourselves back under this 112, I think we could head back to parity, at which point that would indicate great strength in the dollar, which in the overall shape of things could knock the US indices off and ultimately the European indices off. If we look at the volatility index, that's at a crucial stage as well. If I take this trend line off, so basically, it's a fear indicator. If this fear indicator holds this trend line, starts closing higher, and the dollar starts closing higher, then you know that there is more fear in the market. So at the moment, this is subdued. The pound is sitting up, and as such, things like this oil are coming off of a key level of support. So we've got major 50, this is the weekly chart again still. So we've got the major support down there at 67. I actually bought the low today because if you look on the daily chart, that hit a key 21 support level. It hit the breakup area from December last year. So back over here on the left of the chart, you can see we had a higher low here at 66, closed above 70 and went on a decent run. So if the oil holds this level here and closes higher and the pound stays elevated, then these are all things that could indicate the market is looking higher. Hi, Andy. So I'm just having a general chat about the strength of the dollar and the way things are lining up for the year end. So one of the key things I think is going to come through in 2023 is yet again commodities. If you look at things like coffee, literally today coffee has lifted off of this support here. So I go back to a weekly. If this coffee holds this is coffee Arabic, I don't even know how to pronounce it, Arabica. That's what I was trying to say. If this coffee holds this level here, I think we're going back to the highs. We need volume to support this. But otherwise, I think that is a goer. Gold. So we were flat last week, completely flat last week. We're pulling back into this bar again from the 28th of November. Obviously, we've got a very, very busy week ahead. We've got Fed rates, UK jobs tomorrow, Fed on Wednesday, triple witching, got all the contracts on the futures. Obviously, that affects the commodities. And options and bonds, etc., all rolling over into the new 3-month period on Friday. So, excuse me. I like all of these commodities. Corn is looking all right. Wheat has just come off a major daily support. So I am getting into these trades and looking for these to hold and push up and get back to these highs. I think the supply is going to be a major issue next year, and I think so. You can trade these in general commodities. There are commodity funds, there are individual wheat ETFs. There's all sorts of ways you can trade these. If you look at natural gas, so that held this 53 into early December, and then we pinged right up into that trend line. You see how technical these markets are. That's got, when it gapped up, it gapped up right into that trend line at 67 here. So once that gap fills, this could still go back up to the highs, but at the moment, natural gas is not high up my agenda, but the gold and the food softs like the wheat and the grains are high up, and now coffee has just been added to that list. And high grade copper, if this market is going to hold up, normally you would expect the copper is a sort of a market proxy as well. So if this copper holds up, we're sitting up nice and high and probably overdue a pullback, may not get it. If any stage this copper rolls over, then be warned, that could be one of many indicators that could give you the heads up. But overall, I'm really bullish on the commodities, and I expect those to do really well. And let's look at the indices. This is the NASDAQ. If you compare this daily NASDAQ with the Dow, and even today the Dow is streaks ahead of the NASDAQ. This is sitting up not that far from this year's highs. This year's highs was 37k, and we're just under the 34. So we've recaptured a lot of that down move. However, we have hit a major resistance line. So as we go into all this busy data week, whichever way we come out of this, excuse me, I don't know why I can't stop yawning. That's really weird. I wasn't yawning before I turned the video on. Yeah, so this 33,800 is really crucial. We actually had a really bad week. But we've pulled right back into support. Now, if you look at this big bar here from the 10th of November, we've peeled back into part of this bar. So if we subsequently close above 33,800, I think this could go straight in, this could head towards 35,000. Now, so the key thing is the Fed rates. If the Fed don't do an expected 0.5%, 50 basis points rise, that could trigger a big push up. If for whatever reason they do something really unexpected and have a bigger 50 basis points rise, that could really that would definitely knock the market sideways, and we'd lose our footing here, I think. If we just get the expected 50 basis points, then we just need to work out, we need to wait and see if we are going to stay up here and hold these levels, consolidate and then push higher, or just simply just close lower and roll over. What do I think is going to happen? I think we can still hold up into the close, into the year end, sorry. and touch that 35,000, and then we're in the land of then we've got to wait and see what happens in January. All right, so let's have a look at the FTSE. So I am short the FTSE as a hedge, and we are still closing lower on volume. So we're coming, as we come down, the volume's increasing. So that is very bearish. If we at any time soon close above this 74.50, then I think we can recover. But we've got a trend line back down here at 7,400. At the moment, it looks to me as if we can head right back to 7,300, and of course, ultimately come down to 7,000 if that does not hold. But that is a very weak FTSE with all the traits, i.e. increasing volume of a lower number. Let's just look at a few of the basic. I want to look at the financials. Daily chart. So Barclays is midway in this range. We had a huge drop in September. The lows picked up in October, and now we're just sitting in the middle. So we're in no man's land. Literally no man's land with this Barclays. We are holding. The fact we are not closing underneath here is cause for celebration. Otherwise, be very careful. Now, I want to look at this one here, because this one is looking to me as if this might be a recovery stock. This is Numis. Because if this has been beaten up, but if that closes above 183, I think that could punch at least back into £200 plus 250. It's well and truly beaten up. We got a lot of support over here at 150, which we saw down in March 2020. In fact, if I fib that whole lot, what have we got? We've got a chart that's still in no man's land, but we are seeing decent volume down here. But if that closes under 180, hold on, because that could come down to the lows and even break those lows. So in a reversal like that, reversals are lower probability, higher but more profitable. So the reason why I'm interested is because things like AJ Bell have been on a decent run, and that's come from a low of 240, 245 into £4. And it still looks viable on these pullbacks at the moment. So what's this pay? Ooh, that's interesting. That's a very pivotal point down there. So enough of the banks. We'll go to IT because we've got IQE that is holding up. And a lot of volume came in the last couple of days last week. So I just wonder if I can go back to 55 and break through 55. What's the other one I wanted to look at? Yeah, I think I talked about Hargreaves in the room in the Telegram last week. Let's have a look at this is Hargreaves, isn't it? HL, yeah. Yeah, I think Hargreaves is a good candidate. You can see we're trying to hold this pink zone at 830, 855. Volumes have been improving. Yeah, in answer to your question, I think this could pick up, definitely. If we can close above 880, I could see that recovering potentially right into the £12 mark and more, because there's an awful lot of support there. In fact, let me tidy this one up. So look at the weekly. Yeah, so we had a really nice week here on the 7th of November, and we're sitting in that 7th of November range. So yeah, I think this is a good one. Obviously, there are risks. Yeah, you know only too well there are risks with every single trade, but I think if you can try and capture 28.40 with a stop under £8, I think that is a recovery stock. Pretty well beaten up. Not entirely certain why that is so beaten up, unless I have to look at obviously the fundamentals but it wasn't that long ago. April 19, we were £21.60. So you can see the £10 is an obvious issue, but I think we can do £12. I think that's worth it. Yeah, thanks for reminding me. I did post that and forgot to follow that one up. Anything you want me to look at? Because my inclination is not to go through a lot at this stage. Elementis. Yeah, see, I've been talking about this. This looks really nice now. This is the volumes are coming into this chemical company, ELM. TPI cap. Let's have a good run. I think that needs a pullback. Main group. Yeah, let's look at oil. Yeah, so the oil weekly has pulled right back into, see, back here in late December last year, we held this area. So if we end up the week holding this 73 and closing above 75, I think that could go back to 90 and maybe 80, at least 85. Possibly a full move into 100, possibly. Yeah, that was a very bearish week last week, and we've got 68 sitting there. So if we don't close well, that could just roll over. But in the meantime, we are definitely trying to hold here. In fact, that's a daily buy signal. We close here, new low in the range, close above, and that has a potential to hold up. So if you were looking to buy that, I would try and bid on 71.50, 72 tomorrow, if that dips right back. Right. Anything else you want me to look at? Anything specific? Otherwise, I'm just going to leave it there because I'm not that active this time of year anyway. Tallow is still closing lower on volume. BT and Vodafone, yeah, they've been surprisingly weak. And now we've had a good volume day today. It didn't lift it above 90. I'm interested from the point of view of that volume coming in. If we close above 90 tomorrow and hold on volume, then I think this is a recovery stock as well. The volume alone makes me think that could well close higher. BT, yeah, I've been monitoring these two very closely as well. Come on, well, it's not showing me BT. Why is that? There we go. Again, very key level of support. The difference between Vodafone and BT is this is not seeing decent volume. So it could point towards a test of the pound mark. But these are really, really interesting areas on these two. You know, overall they've done pretty well over the last couple of years, but with the exception of this last 6-month period on this BT. Vodafone is definitely my preference to BT at the moment. Okay, so let me have a look. Anything else I am interested in? Yeah, QQ. I talked about QQ last week. I still think this is a good, well, I still think it's a good stock. I suggested you might want to buy this last week. I'm in this. It's got a lot to do. We need to close above this 355, but if we are able to, and again we see an increase in volume, I think this QQ Quinitech is well worth a trade. I'm just ultra cautious. I'm just taking profits, scaling back, and getting ready to be largely cash into next year. You know what? I hardly ever look at that index. Let's have a look. Let me try and find the Russian index for a start, because I never look at it. Good point. Let's have a look. Major indices. IMOEX. Okay. MIB, is that Russia? That's not working on this. Just use TradingView. Okay. Yeah, I'm going to pass on that because I don't normally look at Russia anyway. I've looked at. Sorry, yeah, you're a bit. I've covered Europe and the US in detail, and yeah, this commodity boom that I expect next year on a follow through to this year. Do you not trade? Do you trade UK stocks? What do you normally trade, Raymond? But yeah, like I said, I am short this FTSE. It's coming down on volume as a hedge, if nothing else. Right, I'm going to leave it there. I will make sure you. Are you in the Telegram room, Raymond? A Telegram room running as well, which I will post the. Yeah, okay. I'll do another look at Nasdaq, but you've missed the first 20 minutes where I talked about all the noise that's coming through in terms of Fed option, triple witching, options expiry, etc. Looked at the dollar strength and volatility index, and yeah, markets are just very quiet as we sit and wait for all this to pan out. I think the crucial, in fact, we've even got the federal budget balance coming in half an hour. It's going to be the outcome of Wednesday is going to be crucial. I'm not too bothered about triple witching on Friday. It's a question of whether if the Fed go ahead with a full 50 basis points, if they give us a surprise, but either way, yeah, how do the indices come out on Wednesday? Do they hold up? Is the market happy? The buyer is going to sweep in and buy these dips. We've got a very quiet S&P today, pretty buoyant Dow, and a flat Nasdaq. So it's all to play. Listen, I'm going to leave it there. Thanks for joining me. I'll post the recording, and I will also, as the rest of the few days roll out, I'll follow up with the market reaction to all this data that's coming out. All right, have a good evening, guys, and thanks for joining me, and watch out for more